Hi. So in this lesson, I'll be explaining the non-current assets under the investing activities. Okay, so I want to teach you how to find the amount of the non-current assets purchased, specifically the vehicles and equipment. So if the information says that new equipment or vehicle was purchased for cash, and then obviously the amount will not be given. All you need to do is to draw this T account. Okay, the first thing that you need to work out is the carrying value of the current year. So sometimes it will be given on the statement of financial position as property, plant, and equipment. So if it's given like that, that would mean you're going to transfer the amount as it is, but the carrying value of the current year. But if you are given the cost price and the accumulated depreciation, you're going to work out the carrying value by taking the cost price minus the accumulated depreciation. And then from there, you're going to add the disposal at carrying value. The non-current assets are sold during the year. All right, so how do you calculate the disposal at carrying value? You take the cost price of the asset sold, you minus its accumulated depreciation. All right, and then you add with the depreciation, which is normally given on the statement of comprehensive income. On your debit side, you're gonna have the carrying value of the previous year. The carrying value is also calculated the same as the carrying value of the current year. You take the cost price, you minus the accumulated depreciation. And then from there, you add all amounts on your right hand side, on your credit side, and then you minus the carrying value of the previous year, the amount on the debit side, on your left hand side. The difference will go to the non-current assets purchased. Number two, what if you are also given a land and buildings amount, and then if there's an increase in land and buildings? If the land and buildings are increased in the current year, the difference will be shown in brackets because these represent an outflow of cash. So if you compare the previous year and the current year, and you see that the current year it's bigger than the previous year, that would mean there's an increase in the value of land and buildings. An increase in the value of land and buildings means that more cash was used to renovate the property, or additions were made on the property. Maybe more what you call, maybe more let me think, rooms, or maybe more space was created in the land and buildings. So obviously if you expand your property, you're gonna make use of cash, and your cash